Ian Silk, welcome to the business.
Thank you, Rachel.
Ian, Australian Super has $180 billion under management. How big have your losses been in this crisis?
Well, it depends on the time period you look at, Rachel. Some people are examining losses from the high point of the cycle. I think the most appropriate shortest term to look at is on a financial year to date basis. And it will surprise a lot of people, given the headlines in the last 3 weeks or so, that most balanced superannuation funds are down somewhere between 6% and 9%.
That's quite remarkable considering that the ASX is down 32% since the peak, which was on February 20. What's your advice, particularly to those close to retirement, on how to deal with this situation?
So that figure will surprise a lot of people, and there are two reasons for the disconnect. One is that markets had risen substantially since the start of the financial year, since July, so they'd risen substantially and they've come off from that intra-financial year high. And the second is that most Australians have their money invested in what are called balanced options, which have a mix of asset classes. And so some of the non-equity asset classes, and I'm thinking in particular of unlisted assets, haven't fallen nearly as far as equity markets. So you aggregate those asset class returns together and you get about half the fall in equity markets translating through to a balanced option return.
And so what would you say to calm the concerns of people who are nearing retirement?
I think there are a few messages. One of them is to try and put this into some context. So there's been a very substantial fall in equity markets in the last few weeks. But that's on the back of an extraordinary, and I use that in the literal sense, an extraordinary period of investment returns over the last decade. In Australian Super's case, 7 of the last 10 years have produced double-digit positive returns, and the other 3 years have been modest positive returns. Now, we say to members that in a 20-year period, you might expect 4 to 5 years of negative returns. So we've had this enormous increase in retirement savings over the last decade, and we're seeing a very sharp, very sudden, very worrisome for many people correction, but that's what it is, it's a correction.
What about people at the other end of the spectrum, the younger workforce who are clearly in this for the long haul?
So superannuation is a multi-decade investment. And if you're a 20-year-old or even a 30-year-old, you're going to have your money invested in the superannuation system for 6, maybe 7 decades. So the very turbulent period we're experiencing now will be one of many such periods over that 60 or 70 year period. So we'd say to those people, don't act precipitously unless you've got a particular reason, and this is true for everybody, unless you've got a particular reason, just hold your stations.
The way through this crisis is all dependent on a vaccine. That could be a year, 2 years away. How big is this hit going to be for super in that 2-year period, say?
Well, you're right. This is not a financial crisis in the way the global financial crisis was. This is a health crisis with economic manifestations and financial manifestations. So it's difficult to craft an economic policy or a financial policy to deal with what's essentially a health issue. So we are hostage to a vaccine or some other public policy structure that sees the health crisis come to an end as soon as possible. In the absence of that, we're reliant primarily on the government and the RBA to provide the backstop for the economy to continue to operate as best it can and maintain employment critically for as long as possible.
A lot of lessons will be learnt from this experience. Should people's super be guaranteed, a portion of it guaranteed, so it's less reliant on money markets?
The approach we take is that investment in growth assets, especially equities, over the long term produces the best long-term results for investors or superannuants. There's no such thing as a free lunch in investing, so you can provide guarantees, but that comes at a cost. You can guarantee that there won't be any losses, but the only way to guarantee that is to invest in very conservative instruments that over a long period of time will do less well than a balanced portfolio, which includes some conservative instruments, but also includes growth assets like equities. So what we're experiencing now, make no mistake, is a period of very significant turbulence. I'm not downplaying that in the least. But these sort of events happen in investment markets. And history shows after every trough, the peak is higher yet again.
A lot of people will find themselves out of work in the coming months. Should they be able to access their super early?
There are provisions for people to access superannuation ahead of retirement. There's a financial hardship provision, and there is a provision called compassionate, or grounds for compassionate early release of superannuation. So there are vehicles already that provide avenues for people to access their superannuation. There are significant guidelines around how that access operates, but there are avenues available.
Ian Silk, it's been great to talk to you on The Business. Thank you.
Thank you, Rachel.